So I'm Christopher Smilas, from Cyprus, born in Johannesburg, educated in London. I'm mainly a fundamentals trader, as I explained to most of you who were here yesterday. What I focus on is data points, fundamentals, geopolitics, news feeds, headlines, that sort of thing. So very briefly, I'm not going to repeat myself and everything I said yesterday, but living in Cyprus, mainly because that is where all the Forex brokerages are based. So what that allows me to do is visit the offices and speak to the CEOs of the companies and get a good idea of how they operate and if they're good or if they're bad, because there are some good brokers, there are some bad brokers. We're very lucky to have FIBO Group as a partner for myself and the rest of the presenters here, because their trading conditions are fantastic. They have very good price feeds, good liquidity, good swaps, which is a bonus for all of us because of the trading matrix system that we've now designed, which is mainly based on cross correlations and finding tradable assets with positive swaps so that we can hedge and avoid or mitigate or decrease the risks that the market poses to us, because it is risky. It's high risk, Forex, very high risk. So we always need to manage our money, manage the risk management is a big part of everything. So that's enough about me. What I'm doing, I'm managing director of ForexTrustClub.com. It's a similar trading site to tradingstars.de in the respect that we offer the similar services. We promote brokerages, we offer education, ideas. We're trying to build a community of traders who have good ideas, good strategies, good opinions, well-educated, well-experienced traders who can help beginners and also, even expert traders or people who think they're expert traders. The most important thing really about what we do on Trading Stars, Christian Stan's website, and my website, ForexTrustClub.com, is the recommendation or the allocation of individuals like yourselves and saying, listen, this is a good place to trade, and this is not such a good place to trade, because it's common knowledge. If you invest with a dodgy, that's a very English term. Dodgy means not so good, not so professional. You'll see reviews on the internet within minutes, within days. They'll do some dodgy things. So we find the safe places for investors to allocate their funds. This is my FX book. My FX book is a website where you can connect your trading accounts to the website, and what the website does at my FX book, it copies, follows, and then publishes every single trade, the performance, the everything about every action that is taken on the trading account is recorded and published on my FX book. And as you can see, you can build your profile, you can publish certain accounts, you can hide the trades that you're placing, you can publish them publicly. It depends on what you want to do. But obviously, what a lot of people do is they will not publish the trades that they're executing because it allows anybody to just copy you, okay, with no free of charge. And of course, we're doing this to assist people. We're doing this to make money as well. That is the honest truth. We want you to make money. We want to make money as well. They're the facts. So that's just a little bit about me. I'm a professional trader, 8 years experience, Forex, stocks, CFDs. Services are primarily educational, informational. and I'm a partner for 3 different brokerages, but FIBO is the main one I'm focused on now, because another great thing about FIBO Group is that the PAM accounts, I'm sure you're all familiar now after all the lectures what a PAM account is, yeah? Does anybody not know what a PAM account? Do you not know what a PAM account is? Okay, a PAM account is, in very, very sort of simple terms, it's similar to a hedge fund. Okay, so it allows many, many people to collaborate and invest into one account where there's one PAM manager who can trade for everybody who invests into the PAM account. So,
Chris,
mm-hmm.
honestly, we are not allowed in Germany to talk with the marketing for PAM accounts because the BaFin regulation did forbid this. Because there are so much scammers. And I just had to explain in German that. Also ein PAM-Account ist im Grunde genommen ein Metatrader, das heißt, er würde das Geld einfach mit handeln auf seinem Metatrader-Konto. Das heißt, man kann praktisch in den MT4 investieren.
Followers dann quasi im selben Account haben.
Genau, er handelt dann praktisch dein Geld mit und du profitierst oder verlierst. Das heißt, du gibst aber dein Geld vollkommen außer Kontrolle. Das heißt, er hat es de facto auf dem MT4 drauf und ist dafür natürlich voll verantwortlich. Das ist das Risiko dabei, da er nicht lizenziert ist, das zu tun, da er kein Vermögensverwalter ist, ist in Deutschland die Regelung so, dass wir das im Grunde genommen darfst es machen, aber wir dürfen es nicht bewerben. Deswegen sage ich mir das jetzt. Hier ist es jetzt unter uns ist scheißegal.
It's quite sorry, carry on.
Du gibst das Risiko sozusagen voll in sein Hände. Das ist wichtig zu wissen. Er handelt praktisch nicht nur eigenes Geld, sondern er handelt halt auch Kundengelder, obwohl er kein Vermögensverwalter ist. Das ist das Interessante. Kann natürlich dann auch anders agieren. Das heißt, er hat nicht die Regularien, die die Vermögensverwaltung hat. Er darf viel aggressiver vorgehen, er kann viel mehr Performance machen, er kann viel mehr verlieren. Und das ist das, was er jetzt gerade zeigt auf meinem Flixbook, ist im Grunde genommen eine Homepage, wo man sehen kann, das sind echte Konten, das sind echte Performance, die verifizieren sozusagen, dass seine wir haben sowas auch, aber wie gesagt, wir dürfen es halt nicht offiziell.
It was a recent, the new regulations is another big issue. All of the FOREX exhibitions and expos that are happening right now in Cyprus, or that have just happened in the past week, the main issue right now is regulations and ESMA, sort of region, and MiFID II, the new regulation that came in, MiFID II, that is making things a little bit stricter, just in terms of leverage and regions and different countries' regulations. So just wanted to mention the PAM because it is one of the benefits. But anyway, so again, I just want to, for anybody who wasn't here yesterday, the first thing I will do when I wake up in the morning in order to set up a trade again is I'm looking mainly for the major headlines and news feeds in order to get the market sentiment. So I don't think a beginner is able to do that. You know, I mean, you may be able to. You might be very good at reading the news and getting a gut instinct and acting on it. But I think I've managed to sort of build this awareness because I've been trading sort of 24 hours a day, Monday to Friday, for nearly 8 years now. So it's easy for me to turn on the news and quickly get an idea of what trade to place. So I am what I suppose you could call my strategy gut trading. You know, I go with my stomach and then I'll defer to my brain and think, okay, now I'll look at the technicals, now I'll look at the charts and think, okay, am I making the right choice here or am I just being impulsive? You know, so I have to check myself, you know what I mean? I'll go with the news, but I have to check myself again. I'll step back and then use technicals. So again, I don't want to repeat myself for anybody that was here yesterday. But again, it takes years of experience to be able to develop that skill. So it's 2018, 2017, pretty much all the way from 2011, 2012, we've been recovering from the Great Recession, the 2007, 2008 mortgage crash, the credit default swap scam that caused havoc, and we lost trillions of dollars globally. nations went up to 30% unemployment, everybody was out of work, companies went down, but we've been in a slow recovery. So volatility, essentially when you listen to somebody on Bloomberg and they're talking about volatility, they're talking about the markets going down. Okay, that's what they're talking about, because the S&P 500, Dow Jones, any major index or indice, generally they're moving upwards. Occasionally you'll get a news report or an event or something will happen, maybe a plane crash or an earthquake or a tornado or some major event will happen and you'll get a drop down. But these are temporary and the market normally recovers and comes back. But for me, if you look at the charts, which I will show you in a minute, beginning of this year, January, everybody was going crazy. They were going nuts because the markets were dropping by 3% on a daily basis, which was occurring in sort of 2014, 15. You were getting daily moves on the DAX, on the Dow, the S&P 500, Dow Jones. You would find 1% moves, 2% moves, 3% moves, which is good for traders. You know what I mean? That's how you make your money. You want volatility. You want big movements. But again, it's also high risk. Sometimes it's better to, put your money in and just wait for it to go up. But then you're looking at low returns. This is low risk, no rewards. Low risk, low rewards. So for me, I'm a slightly riskier trader than most because, I'm watching the news and waiting for these major events in order to find these huge gaps or moves on the market. And that's the way I trade. Everybody has their own strategy. Some people like to play it safe. I like to play it safe, but in terms of risk management, obviously I'll use a stop loss and things like that and manage the risk in those sort of ways. But for me, these are the major sort of causes for concern for this year. These are the things that are going to cause either the next recession or even worse. Who knows? A recession, when people say recession, they get a little bit scared. Recession, the dictionary definition of recession, it's a correction. And it has to happen. That's what capitalism is built on. It can't just go up and 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 up forever. It's impossible. Can't be done. Eventually, there has to be a correction. The system has to reset. Interest rates and everything, they can't keep going up, because then you're looking at inflation, hyperinflation, and then we're all in a big mess. So a recession is not something to be scared of. Recession is something that's necessary. So these are the things I'm watching out for in 2018 for the foreseeable future. Federal Reserve, Central Bank of America. We've got a new president there, Mr. Powell, Jordan Powell. So he's in charge now. Janet Yellen did a very good job. Before her was Ben Bernanke. He was a lot more hawkish. Hawkish in FOREX terms. Hawkish means like aggressive, and dovish like the bird hawk, like a hawk. It's a hunter, yeah. And a dove is a peaceful bird. Okay, so these are two like slang terms in FOREX. So Powell, or Bernanke, before Yellen, was a real hawk, and he was all about quantitative easing, printing money, selling these T-bills, treasury bills, or bonds. In Germany, you call them Bunds. In America, they're called bonds. And what he was doing, essentially, he was printing bonds, trillions of dollars worth, and essentially the way that it would work was, and this is why we're seeing such a successful, such big gains on the stock markets, is because he was printing these T-bills, essentially printing money, okay? And then what he was doing with that money is he was lending it to the investment banks. And then the investment banks were supposed to be sort of, creating a trickle, they call it trickle-down economics. You ever been to a party where you have the champagne glasses, like a pyramid, yeah? And you pour the champagne and it goes, That's trickle-down economics. That's the theory behind it, that you put a lot of money at the top, and those people are supposed to be responsible, those investment banks are supposed to be responsible and give out loans to small businesses in order for the small people, the people with lower incomes, the people with lower, not the top 1%, the rest of us, in order to grow and build businesses. So what they're doing at the Federal Reserve now, Yellen started it after Ben Bernanke left. She was talking about raising interest rates. It's happening very, very, very slowly, really slowly, too slowly in my opinion, because essentially America are at full employment now. We went from 30% unemployment, now we're at 4% unemployment, which is essentially full employment. So everybody has a job. I don't really believe the figures, to be honest with you. I don't believe it, because if you go to certain neighborhoods in New York or Detroit, or it's not full employment. There are certain demographics, certain social demographics where neighborhoods, they don't have jobs, they don't have opportunity. So I don't believe a lot of the stuff that that comes out of the central banks. They're always playing some kind of game. There's always some kind of ulterior motive. But anyway, they're raising interest rates. What that means is that if they're going to raise the US dollar interest rate, or the US interest rates, that means the dollar will increase. That means that people are going to find a higher yield. They're going to change their euros into dollars. Yeah, because in Europe, in the Eurozone, we're still at 0% interest, right, or 0.025. It's ridiculous. We don't. What do you get? Interest rates in your bank account? I mean, you're not making very much, right? The banks aren't giving you much money back for what you have. So that's the situation. So the Federal Reserve are leading the way in interest rates, and they're saying they're going to do it 3 to 4 times. But we're talking about 0.25%, 25 basis points. So it's slow. It's not much. I mean, I can't. Off the top of my head, I would say, 20 years ago, I think you would be able to open a bank account and get 10, 7, yeah, like something like that, 5, 6, 7, maybe even as high as 10 at some banks, interest rates. So you could put $1 million in the bank, and you're going to make 100 grand at the end of the year if you just let it sit there. But that's not the case after the recession, the Great Recession in 07, 08. So what that means, though, is if the dollar gets more expensive, it means it's harder for people to... the stock markets and the guys on Wall Street, the traders on Wall Street, they don't like this. They're scared of it. Because if the dollar goes up in value, it means it's harder for people to buy American stocks. It's more expensive, right? I mean, if you're a foreign investor, if you're trying to buy stocks in euros or yen or whatever, pounds, it's going to cost you more to buy one Apple stock, or however many stocks you're going to buy. So when they raise the interest rates, and this is it's kind of new territory as well. And all of the guys on Wall Street, they're young guys, and they don't really know how to react to the situation. If they raise 5 times, then we're going to see some serious volatility, and this is all. It's just progressing. You just have to read the news, watch the news, and find out what they're going to do. And the speeches as well. The speeches from the Federal Reserve. Jordan Powell will, do a speech, sort of twice a month. He'll come out and do the FOMC minutes, and they'll sort of release their policy, their plans, and how fast or how many times they're going to raise interest rates. So you've got to watch out for that if you're going to be buying stocks. You're going to be buying stocks at this time, be careful. Because the stock markets are at all-time highs. They've been going up and up and up and up and up and up and up because of quantitative easing. Essentially what QE did, it didn't work, this trickle-down economics. The central bank would print the money, they'd give it to Goldman Sachs or JP Morgan, and JP Morgan would essentially just buy their own shares. I'm serious. That's what's been happening. Share buybacks, right? Share buybacks has been going on.
Companies that do buyback shares.
They're doing it. It's a common thing now. I mean, it's the most common. It's extremely common. So that's why we're seeing such high rates on the stock markets. So it's all kind of overpriced, and it all seems to me to be a little bit false, a little bit fake. You know what I mean? It's like me paying myself. If I had a money printing machine, I would just print the money and put it in my pocket, and obviously my value is going to go up, right? That's what the corporations are doing.
Just a short comment. What do you think about the fact that central banks recently buy shares? That was never the business from central banks like Japan, Switzerland. They have big assets in stocks, in stock market. That's for me, it's very interesting. And what do you think about that fact?
Well, it's unconventional.
That was never the business of central banks.
It's unconventional, yeah. No, the mandate of a central bank is to set interest rates and control employment rates. That's it. That's all they're supposed to do. They're supposed to control the interest rates and monetary policies.
Yeah.
Buying shares is, again, it's an alarm bell.
Yeah.
You know, it's a big alarm bell for me. It's something that is never been done before. We are living in times now in 2018 that the central banks are doing things that was never their business to do. And I think the reason why possibly is because they're running out of bonds to sell, right? So they're diversifying their own portfolios by going into stocks and buying shares. That's probably why. I'm not 100% sure. You'd have to call Mario Draghi and ask him, but that's probably why. And it is a big concern for the European Central Bank because they are running out of bonds. They've been doing the same thing as the Federal Reserve. They've been doing quantitative easing, printing money, selling and giving these bonds, essentially free loans at 0% interest rates to the corporations. So the corporations are getting free money and buying their own shares. And that to me is an artificial market. It's overpriced and it will come down, and probably in a big way. I know I sound like a doomsayer and maybe, but I am a short seller. I look for risks. I look for danger. Sooner or later it's going to happen. It is going to happen sooner or later. Sooner or later the markets will come down. It has to. So yeah, I mean that's interest rates going up 3 to 4, maybe 5 times this year. It's definitely going to happen in June. That's been priced into the market already. So watch out on June. I can't give you the exact date, but just you look on your economic calendar and you'll see the interest rate policy, the day that the Federal Reserve are going to raise their interest rates. It is happening in June. That's 100% sort of. In terms of probabilities and the bookies and any sort of way to calculate it, it's almost 100% it's going to happen. So watch out for June for a bit of dollar strength. QE is going to stop because of exactly what I just said. They're running out of bonds to sell. They're running out of, especially the ECB. ECB are in more trouble than the Fed. The Federal Reserve have a little bit more liquidity and a little bit more juice. Excuse me. So it's another obvious alarm bell for me. We all know, I'm sure you've all read on the news, you don't have to watch financial news feeds to know that Donald Trump is causing trouble with China and threatening trade wars and this and that and the other. He'll say it's right. We're going to slap tariffs on aluminium and steel because China have a monopoly on this industry and they're making too much money and they're getting too many benefits. And essentially, I think he's jealous because in the US Steel, General Motors, that was the core of the American economy all the way through from the 50s, maybe from the 1900s, all the way through until Ronald Reagan and Margaret Thatcher came into power and they started deregulating things. And also when the Iron Curtain came down, by that I mean when Russia opened up and the Soviet Union sort of crumbled, and also when China, the bamboo curtain we call it, that came down, and all of a sudden we had an extra 3 billion workers, you know. So what America then decided to do is they said, right, we're going to shut down our factories. We can get cheap labor in China. We can pay them 10 cents a day or $1 a day, as opposed to paying, you know, a good, hard American or English or, you know, a solid worker to build cars and work in the aluminium and steel mines. So everything is essentially, it's all been outsourced to China and places like Russia. So, and it's on and off. It's on and off. The trade war is on. We're going to put 15% tariffs on steel and aluminium. And it's kind of like a poker game. It's kind of like a, you know, it's like a power play. I'm going to, you know, push you and pressure you in order to get a reaction. So, you know, it's toing and froing. It's tit for tat. And I think it's just Trump's way of negotiating with people. He likes to just sort of push people into a corner, wait for their reaction. If they react badly, he'll step back. If they react positively, then he's won. You know, he's won the game. So this is all geopolitics. You know, this is all global politics, and tensions are rising mainly because of the Trump administration, the American administration. I mean, the meeting with North Korea was supposed to happen. It didn't happen. It might happen. And all of these things affected the markets in a big way, and I'll get to the charts in a minute, and I'll show you how much they did affect them. Iran, obviously, big problems. The war in Syria has been ongoing because we've got Putin supporting the Syrian regime. And then we've got the allies, we've got France, Germany, England, United States of America, all on the other side, right? So we're all going after the terrorists, and Putin is kind of supporting them in a way. Now, if there is some kind of accident in Syria, let's say an American plane takes down a Russian jet, that's going to be pretty big, right? Because it could be very dangerous. So obviously another thing to watch out for. The U.S. Embassy in Jerusalem was a really, I don't know what the word is. I mean, it was just very contentious. Provocative. That's the word I'm looking for. It was provocative because it was also happening on some kind of national holiday or something as well, and it really provoked, and that's why you saw that massive, all of those casualties and deaths. You know, this whole Middle Eastern region, there's probably just more and more tension coming, and because of pulling out of the Iran deal, Syria war, embassy in Jerusalem, Brexit's coming up. You know, the Theresa May administration and the Tories are being pushed to hurry up and make it happen and to speed up the process. They're looking for what they're calling, or what they want is a soft Brexit, not a hard Brexit. There's no such thing as a soft Brexit. It's going to be a hard Brexit. There's no such thing as a soft Brexit. So that's also going to affect the pound. That could be a good trade.
Cable is still rising. The cable GDP is still rising.
It's touch and go. It's touch and go, especially when because of the negotiations and the conversations that they have with the European Commission. You know, they make progress, then they have an argument, then they're making. You know, it's up and down. It's always up and down. But on the actual date when officially it happens, you know, who knows? The announcement, obviously, we all know what happened when they announced it in 2016. It was a massive, I think it was around 8% drop on the cable. Huge. Italy, again, politics. Right-wing, populist, not happy with immigrants, not happy with this, not happy with the other, not happy being in the EU. So they might even leave the European Union. So that's obviously another massive warning alarm bell for me. So just rising geopolitical tensions are the main theme and reasons I will be looking to sell the markets and go looking for safe haven assets. Generally, that's the way I trade anyway. But with all of this, I think I'm hoping I'm going to do very well this year. I know that sounds a bit callous, considering that these are major issues. I mean, people are suffering because of these issues, but you know, that's another story. And as I said, you know, markets are at all-time highs, so you know they're going to correct. They've got to come down at some point. So this is the Dow Jones. We're basically looking from the beginning of sort of January and February up until today, where the Fibonacci levels are set and the moving averages are set. So, as you can see, I believe the beginning of January, it was mainly the volatility. It was a huge scare. I mean, you see these drops? I mean, where are we going? We're going from 26,739 down to, 1, 2, 3, 4, 5, 6 days, 7 days to 23. That's like 3,000 points on the Dow in like 4 days. And the main reason was the reasons I just mentioned. Mainly it was an interest rate thing. How many interest rates are we going to get in the US from the Federal Reserve? That was one. There were a few other reasons, some unknown, some are known. So I think once you see a drop, like a 200 or 300 point drop or 1,000 point drop, people all jump in on the same trade, and that creates momentum. Everybody's pushing it down, everybody's selling, everybody's getting on the same trade, and obviously it gets down to 3,000 points. And then obviously we're testing our support level here on the 0% Fibonacci level. So you're seeing some small recoveries, ticks up, but then again, you know, this is 1 day. Again, massive gain, you know, from 23,000 up to 25,000. So 2,000 points in 1 day, that's a big move. And again, you know, we're kind of, I don't know, you know, but they blamed it on robots, they blamed it on interest rates, they blamed it on algorithmic trading, they blamed it on a few things. For me, I think it was mainly to do with just profit taking. It's just guys on Wall Street saying, right, we're at 27,000, let's get out of this trade, sell our stocks, and take everybody's money who are still buying. That's generally the reason why you'll see, but also it's fundamentals. You know, you can't use technical analysis to predict this. You can't. It just happens. It happens so fast, you can't do it. So once it happens, then you're looking for like your 200-day moving average, and it just touched it, just kissed it right there. If it crossed it, you know, then we could have been looking at some serious sell-offs. It could have dropped another 5,000 points. It could have gone down way further. So then, okay, so we have a bit of a recovery, and this is what we call volatility. Up, down, up, down, up, down. These huge pops up and down. And you can see that the Fibonacci levels are kind of working for you there. You know, you can see that. So we hit down on 0. We'll come up. We hit this level essentially right here. We'll come back down to this level. It tries to hit this level. Doesn't quite make it. It's going for the 50-day moving average. It essentially comes to this level, comes straight through. It's about 50% towards the 0% level. Next day comes in, hits the 0%, this support level, and again we're back in a rally and everybody's happy, everybody's safe. And then hits the 47.8, and again we're in a similar situation. 3-4 days of sell-offs, and then another little rally, and then we're getting into February now. We're in February. And February, they were looking for the Dow Jones to start retesting those lows, those low levels that we saw in January, where it got down to sort of 23,000. And we did. We saw it in, 27th of March. We didn't quite get it in February. Now, what were the reasons for these drops? Because this happened, I've already explained the reasons why this happened. And we were starting to recover because the markets were pricing in the interest rate increases and all of that. So the market was regaining confidence. But again, we're starting to see these drops. And I believe the first one here was the announcement of the trade war with China. That's when Trump said, right, we're going hard on China. We're going to do 15% tariffs on steel and aluminium. And then he started going after the FANGs, the tech stocks, the Facebook, Alphabet, Netflix, and Google. That's what we call them, FANGs. But essentially, we're talking about the NASDAQ. So again, Trump starts saying, okay, these companies are too big, they have a monopoly, Amazon is too powerful, Google is too powerful, Facebook is too powerful, we have to do something about this. They need to be regulated. So that's why Mark Zuckerberg is being in court in the US Senate and last week in Europe here. And it caused major sell-offs just because he thinks it's unfair and he's not happy with them having too much power. So now I just want to go into my charting. So I'm going to pull up my charts here.
That's what I wanted to ask you.
Yeah, sure, go ahead.
When you look at the big picture, Dow Jones, from the breakout about 18,000 points in Dow, it's now about the level from 100% at the top. At the all-time high was only 38 Fibonacci retracement, not lower than this. This could also be a bull flag, actually, a consolidation at high level, and it could be continued.
Of course.
Or it could be a double top. You will see when it reaches.
You'll see when you see it. you'll see when
but
you'll
know
see.
What I mean. It's just within the 38 Fibonacci retracement, not lower.
Yeah.
So far.
Yeah.
That's what in market technique. That's what I want to explain and to ask you about your opinion.
Well, like I said, from the very beginning of the seminar, my seminar here, is I use technicals. I'm using Fibonacci levels, but really, to be honest with you, they're completely secondary things for me. They're just slightly like confirmations. They're indicators. For me, I'm more into looking at political movements and announcements, and that's where I look for the. So
you're absolutely not technical.
I'm quite anti-technical. Yeah, I mean, I'm not really a technical trader, but of course I use them to give me some kind of idea. You know what I mean? To see patterns.
Yeah.
But I really, I like to spot patterns. I heard the previous speaker talking about the golden ratio and the Fibonacci and all of this, and I like that. I like Fibonacci's because it is based on a mathematical formula that Fibonacci noticed in nature. He looked at a sunflower and he said, "Oh, hang on, why is the patterns like this?" Yeah, right. Why is a shell on the beach? Why does it have this spiral? Okay. Now the reason why they started using Fibonacci's and on the markets is because the market isn't just numbers and mathematics and this and that and the other. It's a natural, organic kind of thing. It's people making decisions. Am I going to buy? Am I going to sell? So really it's down to people. So that's why they have the Fibonacci levels, because it's organic, really. When you look at this, it doesn't look like a flower, does it? Do you know what I mean? It looks like, mania. But yeah, like I said, technicals for me is kind of like voodoo. So what are we looking at here? We're looking at gold. Again, we're basically going from the beginning of the year. Right. So, all right, I'm in the wrong account here. That's the wrong account. This is the right account. Okay. So we'll minimize. Okay, so this is my FIBO group.
Yeah, the problem is, Chris, I'm trading a short in euro dollar at the moment, and I like to take profit at 115.83 because I think there's a support zone, and we're going short down for some weeks now. And so my question is now, first, should I take profit in the next week? And also, is it perhaps possible to make the full turn to the long position?
So you're shorting. Where did you enter?
I will show the live trade later, but I entered at 120.28.9.
Nice.
So it's a nice level. And so I'm in a big profit at the moment.
Yeah, that's a lot of pips.
It's now enough, so it should be enough in the next week because we return at the support zone.
Do you know, for me, I think with, because the dollar index, if you look at the US dollar index, it's, and also this is again because of interest rates being potentially risen, I think you could hold on to that trade for a bit longer. Okay, all right, yeah, you're right. It is at a support level, it is at a very strong support level. But we're talking about, we're in May, okay?
Can you change to weekly chart and go back a little bit more history?
Yep, sure.
And then if you go now further, you see it's a very important resistance.
You mean support? Well, is it? That, is it? Is it really that important, the level that you're at right now? Okay, yeah, I mean, these are weekly candlesticks. So we're talking about from November.
Yeah, but now go to the left. Go to the left.
Yeah. That.
No.
Yeah, come up. For me, the most important support level is here. Here. Especially with rising interest rates on the dollar. I think you could hold on to that trade.
Yeah, but swap is against me. If you
The swap is against me.
see this lower,
Yeah.
you see this, you see this, you see this. So it's important make or break. Make or break.
It is. No, you're right. I mean, that is. It's 50-50. If I were you, I would take your profits, close the trade, go in a little bit smaller, lower the volume, and try selling again. Or maybe hedge yourself. But I mean, if you're saying the swaps are working against you, take the profit now, bank it. I mean, what's the size of the trade? One lot, half a lot, one mini lot?
Only small position.
Small position. But look how much further it could fall.
So you would not trade your dollar at the moment. Do you have something better?
For me, no. I wouldn't touch the euro dollar right now. To be honest with you, I wouldn't go anywhere near it. What I would go near is the US dollar Swiss franc, because of all the dangers I've been talking about, all of the geopolitical risks, Iran, Syria, yada yada yada. You've heard it all. That looks like a sweet trade to me. On a daily chart, Fibonacci levels, Swiss franc is a safe haven. It's where people put their money where they're feeling unsafe. So you can also see it's at a massive resistance level, where it is right now, historical level. Now, okay, it could hit this FIBO level. And essentially, that's the way it works on Wall Street now. If you go to the New York Stock Exchange, you don't find the guys in the silly jackets waving tickets around, you know what I mean? Like selling, buy, sell, buy, sell. It's algorithms. It's robots that are now setting all of these. And they do mainly work off of Fibonacci levels, the algorithms. So, yeah, I mean, it could hit that, was that 23.6? Yeah, 23.6 Fibo level and bounce back a bit. But like I said, I'm a short seller. I look for risks. I look for danger. And I think to get into safe havens now is what I'm doing.
Would you see gold as a safe haven?
Well, that's a very good question. That's a very good question. Gold, what did Warren Buffett call gold? He called it a pet rock. You know, gold, I'll throw the chart up because it's strange, because what's happening, what normally happens with gold, obviously it's measured against the dollar. When the dollar goes down, gold goes up, inverse correlation, yada, yada, yada. You know, when the dollar gets stronger, gold goes down. But it's also very closely connected to equities and indices and stock markets. If the stock markets are starting to sell off, then people are looking for somewhere else to put their money. Do you know what I mean? Because equities and indices are high-risk assets. They're called risk assets. So the thing is like the dollar has been getting stronger and gold's going down, but so are the equities. So the correlation there has reversed. It's now a positive correlation as opposed to an inverse correlation. So gold is a funny one. I do like gold. I love gold, actually. I love trading it. I would love it to hit like 1250 or 1100 on some kind of flash crash, get in and just leave it for 2 years. You know what I mean? Just buy it, leave it. You know what I mean? That's what I would love. But you know, I missed out on that one. But as you can see, I mean, I've got a buy trade. I have a buy trade there on gold. You know, I'm buying it because it broke through 1300 and it didn't go to 1260. You know, it went down to like 1285, and it's now sort of back at the 1300, which is a psychological level, less than a technical level. And I'm buying at 1305. I'm buying at 1305 just to see if it goes back into this 1350, 1300, 1350, 1300, 1350, or, you know, sort of this channel that it got into, sort of 1350, 1330.
To 1330 or something, yeah.
Very well, it could, very possible. It's very possible. I would love to wake up on Monday morning and see it at 1400, but I don't think it's going to happen. So let's look at some other. So in terms of predictions of possible good trades, selling the Swiss franc there. As you can see, there's my sell trade right there. It's a small trade, but still could be worth some money. Japanese yen. I generally don't trade the Japanese yen, the US dollar, Japanese yen, but it is a safe haven asset, technically. I don't know if it is anymore, but again, you can see I've got my stop loss there. I'm selling it at roughly 110, nearly 111. No, that's my stop loss at 111. I'm selling it around 109.50. So yeah, those are two trades I like right now. So these are two trades that you could look at yourselves. You know what I mean? You could try a little trade on the dollar Swissy if you like. As you can see, I'm selling tech stocks, NASDAQ. This is the NASDAQ. I want to sell, and I'm a short seller. I want to sell the equity markets because they're overinflated. It's a fake artificial market because of corporate buybacks, share buybacks, quantitative easing, all of the stuff I've mentioned already, geopolitical tensions, war tensions, these types of things. generally are pretty bad for stock markets. And not only that, the NASDAQ is the technology index for anybody who doesn't know. This is where Facebook and Google and all these companies are, the NASDAQ. So it's the tech stocks. And they are coming under scrutiny. GDPR, this new law that came in on what was it, Thursday? It came in, GDPR, privacy policy, Facebook in court. Google are going to face the same scrutiny and the same questions from the governments. So it's a good reason for me, because they're at all-time highs, because of what I've just said, and I mean, you can see it. I mean, you can see the patterns, right? Up, down, up, down, up, down. That's my opinion, anyway. So NASDAQ, sell. Dollar Swissy, sell. Dollar yen, sell. If I'm going to be selling crude, I don't touch it. Okay. I think you may as well go to a tarot card reader if you're gonna try and buy and sell oil. It's almost impossible. It's a really hard asset to trade. To try and buy or sell oil is it's very difficult. You need to do so much research, and it's such a kind of like, in the real world of buying and selling oil, like physical oil, it's an extremely dangerous industry. I'm talking sort of boom, like dangerous. So oil, no, I don't really look at it, don't watch it. But if I'm selling the NASDAQ, I'm going to be selling the other indices, right? I mean, if the NASDAQ's going to come down and USA, right, the major industry that is creating growth and creating success and yield has been tech stocks. Silicon Valley has been leading the way, building iPhones, building apps, building this, that, the other, and it's the main industry now in the US, as opposed to US Steel, General Motors from 50 years ago. So I'm going to be selling the Dow Jones, I'm going to be selling the NASDAQ, and I'm sorry to tell you, because you're from Germany, I will also be selling the DAX. I like the look of it. Again, all-time highs. We've got geopolitical issues. We have, all of the same issues I've been talking about. We're hitting highs and we're seeing massive drops. Volatility, essentially my message for this speech is volatility is back. 2017 was boring. It was just like, just up, you know what I mean? So volatility is back in 2018, so watch out for it. If you're trading and you're buying stocks or major indexes like the DAX, then do watch out. But I'm selling. I'm a short seller and I'm proud of it. And so I mean, these are some predictions. I'll share with you. But really, I don't think I can. These are my assets. I like indices and I like safe haven assets. I like to sell indexes and I like to get into safe havens. So for me, that's pretty much it, guys. But I mean, if you have any questions, does anybody have any other questions? Anything at all? I know you do.
Silver, do you have any opinion on silver? Or
same as gold.
Okay.
Same thing.
Okay.
Same thing. If gold's going up, silver's going up. If gold's going down, silver's going down. Please, nobody ask me about Bitcoin, because I don't want to talk about Bitcoin. So, no questions? Okay. Christian, you have any other questions? Yeah? Okay, well, like I said, yeah, look, I can't wait for midnight. Yeah, so look out for the Swissy, look out for the yen, watch out for the major indexes. Go ahead.
In terms of trading now, where would you put your stop loss on the last all-time high, or on the last high, or how would you set this trade?
Well,
when you sell the DAX now, right now.
Yeah, good question. I mean, you can see where my stop loss is. It's there.
I mean, the last high or the all-time high?
The last high. I wouldn't go right up to there.
Okay.
Do you know what I mean? If I'm gonna put my stop loss up there, I may as well start buying. You know.
Okay.
I may as well switch my position. I'm not always selling the indexes. Sometimes I am confident. I'm not scared all the time. Do you know what I mean? Like.
But now we're at a high level.
We're at extremely high levels, all-time highs. I mean, why would I buy at all-time highs? You know.
I mean, the trend is your friend, but it doesn't look like.
Is the trend your friend?
Usually.
I know it's a common saying, the trend is your friend, but when the volatility's back, you know, trend lines are a bit
The market will decide sooner or later. It's not obvious, but probably the down risk is higher than the upside potential.
Exactly. The downside, yeah, I would completely agree with that comment, 100%. If you were to work it out on a probability statistical level, then yeah, the downside risk far outweighs the upside potential. But anyway, I think that's it from me, guys. Unless anybody else has any other questions, I think I'll wrap up. So thank you very much.